Mess with fire, now it's Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a second more of your time as we go into the charts. Bada bing, bada boom. Here we go. 12 hours candles later, and we are beneath the 786, bounced off the 0.5 of the diagonal fib level. We really didn't go much of anywhere. We went a whopping 1.75% and then equilibrium, and went right back to the middle of that point right here on this diagonal fib level. We've had price captured within. And if we looked at the liquidity, what is the liquidity? Well, if we go into the heat map from High Block, what it is people lock their liquidity in their charts to be burnt to a crisp by the market maker for not using a stop loss. And we get to see who those characters are, because we get to peer behind the curtain thanks to High Block, which is a pretty penny. So if you hit that like button and consider subscribing if you haven't already, you get to see this free of charge every day. So as we see here, yesterday we were seeing this push to the upside, but there was longs opening up in larger quantity to the shorts, so they came back into those longs. And now we are starting to see the shorts open up in larger quantity than the longs here in this point up here. However, the overall longer term bubbles down here could suggest that we come down into these pools below at 26.47 again for that double bottom idea we put out 2 days ago for the W, for that extended W perhaps to the downside. Let's go into the higher time frame, because it looks a little bit ambiguous here, because we lost a lot of the bubbles, if you recall, that were up here that were above 28.5 that were lost to Father Time now. So it looks like we are imbalanced to longs, but if you hold the narrative in your mind long enough, you would have realized there's a lot of bubbles still open up here, which is why we need to expand our vision to the higher time frame. And here is the 7-day, and if you notice on the 7-day, we do have those bubbles still accounted for up here, with the imbalance being to the upside at 28.4, and this entire region being possibly taken for that imbalance to the upside on this 7-day time frame. Now if we go to the monthly, that also I believe coincides, if I recall from yesterday correctly. A lot of this is just a recap, so it shouldn't take but a moment to refresh your memory and help you juxtapose the time frames and juggle them in your mind. As you see, there is more here on this path to the upside, with over 40 billion up here at 30,300. Do we eventually head up in this region for the imbalance to this, and this narrative path to the 34K region? That's where it starts to shift as we go to the 3-month, and we see the larger time frame imbalance being visible. So this is the difference between internal versus external liquidity. You can Google these concepts for more. Internal versus external. So now we're peering into the external range of the 3-month, and you're starting to see $150 billion down here at 25.2 and those regions nearby. So if we come up to these regions at, let's say, 28K and take out this 20 billion up here at 28K, do we come back down then and attack this region? Are they happy with leaving this here with this thickness on the 3-month time frame, or are they going to come and finish the job that they set out to do with these 41 days of longs being taken out that we've had on the menu for 2-3 weeks now? Okay, so this imbalance to the downside is still intact on the 3 and 6 month time frame. So you have the 7-day and the monthly calling for upside, and then you have the 3-month and the 6-month calling for those pools to the downside. And we previously had those beckons to the downside be met with a passion, so they've taken back 150 billion here on the 6-month time frame. And if you notice, there's 82 billion at 25.5 in long liquidity that they could come back to. Now there's an immediate, from the price action here, the immediate place to go would be 27.9 to take this 16 billion up here, and perhaps 28.5 to the 18 billion there. If you look down below in equal number of bars away, you only have the 6, 5, and 11 here to take. So the idea of rising up and possibly taking these pools out, as we suggested before, could be in store if we were going to wind up a pitch to the downside. Now, where does it start to shift is when you get to the yearly time frame, because the values start to also shift in their color, as 100 billion equals aquamarine now, and 200 billion is yellow. So everything looks even Steven on this time frame. And then when you look at the pools to the upside here and you see these $100 billion characters up at 33, 32, and 32.4, you start to think, there's some marionette strings to the upside here that could be beckoning if we start to knock out some of these pools below, which we have. So you have knocked out that 95 billion here. You do have 83 and 100 billion and 91 billion in this region to 24.4. I would imagine if we did come down to here and we hit these pools, we would spawn divergence in a similar fashion as we did here on March 9th, when we had the Silicon Valley Bank collapse and everyone was bearish, and we left this 178 billion on the table. And so they do leave things on the table. Just here to note that 155 billion left on the table to only come back to it without hesitation. So they could come back to this at some other later date if they wanted to come to this too. Alright, so I'm going to go back to the 3-month because it gives me the nearest pool prediction for downside and upside, and also you can juxtapose that with this. So if you look at the 1-minute time frame and we just go off these bubbles here, it looks like you have a stacked region down here at 26.4. You got some 100x that got taken out, so the next 100x pool is down here at 26.21, and that's linked up with all of these bubbles here. And if you go with the 100x pools up above, you got some linked up here at the 27.82 region. I'm surprised they still haven't come back to this. There's a lot of longs being opened up here. Let's go into our oscillators on the regular Binance chart, shall we? And we will start to work our way down from the higher time frame. Okay, so we've already been clear with our fib levels. We haven't really deviated from them, so we don't need to redraw them. So we'll just go right into our momentum indicators. What are these momentum indicators? Link is in the description, momentummaster.info for more. And scroll down to features and toggle at your leisure and read about the components that we go over as we go over them, if you so desire. And if we look at where we were at last time, let me make sure the audio and everything is good. How's everyone doing? Thick liquidity? Yes, sirree. 150 billion down there at that last region. So we're seeing this curvature of the cloud 12-hour candles ago, and we were considering that this piercing of the cloud would be your thing to see it curve. The curvature did not match exactly what we were saying, but it is starting to curve in a certain manner, or at least appears to be. And if we look at the 4-hour cloud as well, that 4-hour cloud did drop down a little bit further than we had seen, but we did see that bounce off of the cloud, and we are currently attempting to reclaim this cloud. So I think we've proven the point about the curvature of the clouds. So what happens, and we did come down to that 618 region, and we've been consolidating above. It looks like we're getting a cross down event that had confirmed on the 4-hour time frame though. So when you get these cross down events as you did back here, we do see some downside occur. So that is something to note. Is this something that's happening on this candle that can be negated by if we come up out of here? That is the question to watch within this. Did it close on this candle, or is it able to be staved off if you come up above? It's testing the limits here on the 4-hour time frame. This could be the downside confirmation for a double bottom idea here, where if you come down to this pool, then you take this off and try to spawn that $150 billion divergence out of here. So these baseline cross down events, you scroll down to baselines, this is your first sign of reversal there, one of the few leading moving averages on the market. So we've gone over this multiple times on the live where these cross down prior to dumps happening, like here, and we watch that cascade to the 6 and the 8 and the 12 and the 22 hour from this point. So if this locked into position, even if you see some meandering around, if you see this fatigue on top of the price with the baselines, that is no bueno for upside behavior, that is conducive of downside behavior. So we're going to go, before we go into the health of these clouds, that was the one thing that was interesting me last time, so that's why we started here. But let's just start our journey from the higher time frame here on the daily. So the daily time frame is starting to give a little bit of juice on the stochastic RSI. The money flow is beneath the RSI here, which could suggest coming to the upside. You're looking to potentially see this crossover event. If this candle closes in this even red state, most likely it'll bring this thin boy over the fat boy here on this baseline, and you could see a crossover event. When was the last time we saw a crossover event? We saw some fake out here, as it was a little bit spontaneously after the fact. It wasn't beneath the price like this fashion. This is the wind up style, scooping like a ice cream scooper angle, 35 degrees or so, and coming beneath the price in a nice manner here. This was not in this case, it was kind of at resistance, so it was kind of a fake out here. But let's go to one that was more similar fashion, like here. So you see this coming beneath the price here back in January, and then it comes beneath the candles, and you see the candles kind of ride this baseline up. So this is what you want to see in all the time frames, when the baselines come beneath the candles and the candles hold this crossover event. So this is not just for the daily time frame, but in general, if you see this crossover event with the price above the baselines and you get that helix, that means you could potentially see some of that move in the opposite direction, in this case the upside. If we go to the 22, we had saw this crossover event Monday morning. We did the Asia Open for that. We saw that and we said the 22 could give you some juice here, and it did. And yeah, it looks like the 22 could still give you a little bit more on the outside of this. Like here, for example, you had on this candle, you had this already up in the same region at 88, and then you went up for a fair amount more after that fact, by about 6% more on that small little amount of stochastic. So once you get the momentum going, you could see it continue. Also, you got the Williams rising sun potential, although it hasn't been met with much surge just yet. We are now on Tuesday, so there is a narrative structure for the week that is starting to form for Tuesday. So far, Asia has dumped it, and London has continued that idea. So what does New York do? Rarely do you see 3 dumps in a row. Normally it's dump, dump, pump, or pump, dump, dump, or pump, dump, pump. It's kind of, or pump, consolidation, pump. There's some sort of intermediary narrative between the 3 time frames of Asia, London, and New York. So it'll be interesting to see how New York hands off the baton to, London hands off the baton to New York today. So we're starting to see this 22 and 12 battle. This is why I said I don't like to short or go against the 12 and the 22. These guys did play to the upside here. Are they going to hold is the question. The 6 hour and the 4 hour gave back just a little bit of their stochastic here, if I'm not mistaken. So you came down to the 50 level, reset half of it, and didn't give back so much of price action. However, you have closed beneath the cloud here, but the cloud angle, as we've talked about, is kind of curving in such a manner which suggests the wake in the ship starting to turn, perhaps. So this, normally when it's thick like this, you pierce the cloud and you start to come back down out of it anyway. Rarely do you pierce and claim the cloud and see it shift in such a manner, especially on this time frame. So piercing the cloud, getting rejected off the adaptive here is par for the course on this time frame when it's this thick. And so coming back beneath this is something you would normally see. It starts to thin, and then at that thinning point maybe you break through at that time. So the 6 hour time frame is holding that cross up event, although seeing a single leg to a double bottom, as I've been saying, the double bottom idea coming back to recover some of this wick just seems to make sense. You have a wick here. Are they going to come back and start to play with the longs that entered here, faking them out, inducing some of the shorts and then surging it out? Or maybe you don't surge it out at all. Maybe that's the end of the bull rally and we just go further down. But this is what you would normally try to look for a long idea. Even if it's something like this, on a short-term basis, we saw it come up, but we didn't really see it come for that double bottom just yet. It was a very short time in here and just a small wick down here. So do we come back for that wick is the question. So going to the 4 hour time frame, you'll see the cloud just the same, and this time we have reclaimed it. So this is what the reclamation of the cloud looks like when you pierce above and then you start to come back for that kiss and you reclaim the cloud. So ideally what you want to see is that thinning of the cloud at some stage, and then that thinning of the cloud would put you in a position where you would see the purple starting to fade in a certain manner, which would suggest the reversal idea. However, you're getting this cross down event, which is considering this to possibly not curve and just continue down in this same fashion. 4 hour wanting to continue down on you with the Williams also dumping out here. Not a sight to see for a long idea. You could see this just bleed out in a similar fashion down to this region. You could have a shoulder head and a shoulder out of here. We have to go to the lower time frames for that type of idea to occur. And you're starting to see this cloud kind of curving. Got a bearish retest rejection perhaps on that cloud. It's starting to curve in another manner like this, suggesting that it thins to the other side and potentially drops down, in which case you could have this shoulder head and shoulder to the downside to come down back down to this region at the 1, and then a greater shoulder head and shoulder to the downside even further down to this region here. Most likely the neckline of that would coincide with kind of coming down to that region too. So are we making our way back down for that recovery of the wick? It seems like that's more likely than not based off the rounded price action rejection here and just the higher time frame narrative of this thickness of the 150 billion down here at this time. Okay. So a lot can happen in 24 hours from this update, so I'm not sure exactly where that's going to take us into 12-hour candles from now. We are at an ambiguous point in the charts. There's apparently some news coming out which has to do with the inflation or something like that. So if based off that news, they could be bullish for the markets too. So they could be just having a holding pattern until that news comes. So we're looking for New York to do something here. New York will be opening in about an hour's time. So hours time from now, what will New York do? We're currently in this range of the 618 of this region here, of this impulse to the upside. We could even take it like that. Here's the original impulses here. But it's basically played out and we are kind of off that idea now. All right, so what does it all mean? Where are we going at this time? Well, as it shows right here, there's not that many bubbles that have entered just yet on either side of the equation. They're just having a consolidation pattern. you did see some previous shorts open more to longs here in this time frame. Here you had more longs open to shorts here, in which they came back to eat some of these longs. They still left some on the table, which coincides with some of these longs that are still on the table as well, which is why you're getting this thickness down here to 26.13 and below, and that coincides with the narrative to come down to this region at 25.4 with the 155 billion on the external liquidity zone. So are we going to come up and tap some of this juicy liquidity of shorts before we do that? Where we stop hunt rise before we drop it, similar to what we did on Sunday. It looks like this could have already been the move, but normally you like 3 hits to the high. So if this was the high, you have 1, 2, and you'd be expecting like a 3rd hit of some kind. This is the power of 3s, so you would see some sort of fatigue in this region if that was the case. And then that would be your signal to enter for a short. Not at this region here, which is just consolidation heaven. So you would be looking for that 3 hits to the high. And we did see that earlier in the week, and I did not take that trade. So I've just been sitting in wait for that perfect opportunity. I don't FOMO in. So we had basically on Saturday here, this was the 3rd hit. It was actually the 4th hit. So we had this, and I was saying, do we consider this as 1? And then this was the 2nd, and then this was the 3rd. That was the thing that had me questioning whether to enter or not, because it was 4 hits to the high. And I had taken this short on the previous week, and we went over that live as we took that to the downside. So I didn't take this one because it was the 4th one, so I was expecting it to go a little bit higher. So that 4th hit to the high. So you normally get 3 hits to the high. So if this is the smaller version of that, you would normally like to see some sort of hit to the high one last time, 1, 2, 3, and then you'd start to see that descent if that's what you're going to do. Okay. So we'll just leave that as one potential idea out in the ether. And yeah, for the external liquidity range, I'd like to see that completed, that $150,000 knocked off the $150 billion knocked off the table would be more conducive to the upside path being paved at this time. And the idea of this being completely the bottom just doesn't make sense to me. The V-shaped recovery was had. You have your Adam, and now you need your Eve kind of structure to occur. Okay. So let's see if you have any comments in the charts. I can't really see anything clear just yet. What I just showed you for that 3 hits to the high scenario was 1 of 2, but we still have some gaps that we were talking about up here, which I'd like to see also recovered as well. So are they going to come back for some of these shorts before they attack this region down here? All right, let's go take a look at the thing, thick liquidity. Once again, thank you for coming on in and sharing your time and essence with me in this eternal moment. All right, so let's go look at the USDT dominance and see how that's holding up. Is it starting to go down as people put their liquidity into the charts? Are we starting to see this reset idea? It looks like it's similar to Bitcoin and how it V-shaped up, and it's kind of holding this thing to determine whether it's going to go in, knock people out of their trades, or put them into trades here. Okay, so we're going to look at the Bitcoin dominance as well. The dominance started to drop a little bit. Okay, so we're starting to see the, let me get this out of here. We're at the previous resistance level of daily time frames for the dominance. So are we going to see the dominance try to make a rise up, or is it going to kind of drop down a little bit? It's already at a pretty almost 50% level, 48, all nearing 48% level. So having this double bottom idea already starting to have played out. The meme coin thing has kind of chilled out a little bit over the last few days. I haven't really seen so much of the shilling from the influencers on that. We'll see what's in store for this week. I think until the news play comes, there's going to be a little bit more hesitancy to see trades go out. I'm not really sold on anything, but this daily crossover event does look interesting and promising for some upside if we hold this level. So it all becomes key to this trend-based bearish fib extension level. We broke down out of the 786, so the next level to watch is the one, which is 26651, and then we have yet to see this hit at the 1382. So ideally, as we've been saying, is you would come down to that region and you create that double bottom off that liquidity here, and when you knock out all 41 days of these longs, then and only then would you probably spawn the divergence to justify some sort of move to hit those liquidity, those guys on the upside here. Okay, so do you see this kind of open up as we saw the fake out occur before and drop us down some more? That is the question. So the 22-hour time frame is kind of holding at this time, but there's a lot of time. There's 9 hours left for that to occur alongside the 12-hour, and the 12-hour didn't really give you so much juice. So false move Monday brought you nowhere, really brought you up a little bit, gave you that false promise, and Tuesday has just been a slow bleed out so far. But the one thing to note is that Asia has bled it, London has bled it, and does New York continue the bleed, or does it pump it up? So you had the Asia normally dumps, hands it off to London, which kind of pumped it up to the same equal range of the open, daily open, and then dumped it again. So does New York send it up to take out that that buy side liquidity on the upside? I would say the hourly, the 15, and the 5 minute with slight 4-hour suggestion do consider a bounce to the upside to take out some of that liquidity before we come down lower. Remember, you go up before you go down, and you go down before you go up. So seeing that surge up and then looking for that 3 hits to the high idea. Where does that fatigue out? Does that fatigue out here? Or are you going to break higher? Once you break these levels, this is null and void at that 706 region at 27645. That's where the short idea would be nullified for me, is if you can reclaim this and close candles above this level, then the 706 dumpage idea is no longer on. But normally the trap door is open from the 706, so that's where they started to open this trap door yesterday. So it's been a slow bleed out since the 706 level here at 27645. So until you can get above that, nothing that pumps you up to this level would be real. You are starting to see this curvature here on the 12-hour, which is interesting to note, but I still don't go against the baselines. The ideal shorting positions are always up here for me personally. The higher probability, top of the Keltner channel, cross down below the price, or price below the baselines. Like, that's my sauce for the short. Here's where I'd be looking for long, so I'd be waiting for this type of divergence to occur somewhere, and then try to scoop up that nice juicy entry. So patience is key in these things, waiting for that liquidity grab entry. So it still has yet to occur. This is the consolidation phase where you just sit and wait and plot your path to whichever side of the trade you're looking for. All right, ladies and gents, I have to get going, so I hope that was worth your time, and we will try to bring it every time in similar fashion. So once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same. I have to get ready for the New York Open. If you're in the Momentum Master Discord, come hop in with me and we'll try to spot some setups on the NASDAQ futures as we try to get some funded accounts up and running. So we'll catch you on the flip side, and thank you for coming on in. Peace.